Don't believe the propaganda, and that's what it is. When you're listening to an analyst on a lot of these popular financial shows, you're not getting investment advice. You're getting propaganda.
Get ready to untangle the web of misinformation provided by the mainstream media.
These firms are trying to sell you stocks. Their real clients, their banking clients, are trying to get rid of stock.
And now, here's your host of Wall Street Unspun, the president of Euro-Pacific Capital, and a licensed broker with a passion for truth. It's Wall Street Unspun with Peter Schiff.
Hi, everybody. Welcome again to another live episode of Wall Street Unspun, Midweek Market Outlook. This is Peter Schiff. It is Wednesday, May, the 13th, 2009. Welcome, everybody. I do this show live every Wednesday evening, 8 p.m. Eastern Time, 5 p.m. Pacific. It's on shortwave radio at 5.07 megahertz and on my website at www.europac.net. And also, we store the archives of the shows on my website and also provide them in podcast. That's what word I was looking for, podcast. Anyway, on my website, the number to call, 888-678-9597, 888-678-9597. Well, we finally had a bit of a pullback in the markets. I mean, today the Dow was down about 185 points. I think we had some weakness at the end of last week. There is a lot of bullishness out there. A lot of the bears have turned bullish. A lot of the bulls have gotten more bullish. So obviously the market is vulnerable to a big sell-off. I mean, certainly look at the strength that we've had in the financials. I mean, I can't imagine a worse sector of the market as far as outlook for future profits or dividends. Yet we've seen pretty big rallies in a lot of the financials, and that to me looks like either a lot of short covering or just a lot of speculative money coming into the market. It makes no sense that those stocks are rallying. But we'll see what happens if this rally, if we get a more meaningful decline following the rally we've had. The overseas markets, though, continue to be outperforming. We'll see what happens tonight. But up until last night, foreign stocks were strong. Many of the stocks that we follow in the Asian markets, whether it's in Hong Kong or Singapore, continue to make rather impressive moves, 5 to 10%, up in a single day. Now, we'll see if that gets reversed. We'll see if some of these stocks that have tripled in the last, few months, if they drop as quickly as they rose. I still think that what we're seeing is more of a decoupling, and I think the reaction that I ultimately expected to happen is taking place. Nowhere I think is maybe that more obvious to people here by looking at the gold stocks. I mean, look what's happened to that index. I spoke a lot about the fact that about half my personal portfolio was gold stocks. The other half was in dividend-paying foreign stocks that are I regard as being more conservative than gold stocks. And the gold stocks, if you want to take a look at the HUI, the HUI, which is the Amex Gold Bugs Index, and people call it the HUI because of the symbol. That particular market, that index dropped about 70% between mid-August and October of 2008 last year. 70% decline. And I had a lot of money in those stocks. A number of my clients in their portfolios had gold stocks. I recommended gold stocks in crash proof. So people following my advice own gold stocks. Now, when the market collapsed, one of the reasons that our portfolios were down was that they included gold stocks. The gold stocks were down 70% in 2 or 3 months. And some of the flack that I got from my critics was that, look, Peter Schiff said buy gold stocks, and they crashed. Look at how much money people lost. He said buy gold stocks to profit from the crash. Look at how much money people lost buying gold stocks. Well, look what's actually happened. I mean, first of all, if you're going to look at that index, I didn't, start saying buy gold stocks in 2008. When I first started telling people to buy gold stocks, that index was below 100. The HUI was below 100 when I first started buying it back in 99, near 2000. The index, in fact, the low of the index, was, I'm looking at my chart, it got down to 35 in November of 2000, right? I didn't start buying it at that low. I started buying it before that low, but I was buying gold stocks for myself and for any clients who were interested back at that level, right? So I've been buying them in anticipation of a major problem for the dollar in the U.S. economy for about 10 years, right? I started it in about 99, 2000, and the index was below 100 when I bought my first gold stock. At the peak in 2008, before that 70% decline, the index hit 520, right? So here I've been telling people to buy gold stocks for 10 years, and the index is up more than 500% during that period of time. But we had that sharp 70% decline, and I get the critics saying, aha, Peter Schiff was wrong. He said buy gold stocks, and they were down 70%. They were only down 70% if you measure them from that high. But let's look at what's happened since those gold stocks hit the low in October last year. The Huey Index this morning was trading at 360. That's about a 130% increase since October last year. That's a huge gain. Now, the index is still down 30% from its peak, but 30% is a lot more than 70%. And it takes a huge move, obviously. We've had a 130% gain, and it hasn't erased that entire 7% loss, but the index is now back to 360. Now, it was down about 10 points today, so maybe it's around 350, but it's still 400% higher than it was when I first started recommending it. But the only time you could have bought that index higher than it is today was between September of 2007 and August of 2008. That's the only time you could have paid more for that index than it is really right now. So all the people that were buying gold stocks between August of 2007 and 8 years earlier when I first started recommending them, obviously, they're ahead, at least as measured by the index. I mean, various stocks, some stocks did better than the index and some stocks did worse. But the point is, when gold stocks had that huge drop, right, yes, I didn't forecast it. I didn't know that between August and October we were going to get this huge gift, that gold stocks were going to collapse by 70%. I did not know that ahead of time. I mean, nobody could have known that for sure. I mean, did I think it was possible? Yeah, I guess anything is possible. I didn't think it was likely that we would have seen a 70% decline, but we did. We did see a big decline. But when that happened, right, since I understood the fundamentals, I understood that decline for what it was, a buying opportunity, a gift. A lot of people who didn't understand the fundamentals, who got confused, they saw gold stocks dropping, and they inferred something from that was real. They thought, aha, this is deflation. Gold's going to get killed. Stocks are going to get killed. It's wrong to be in gold stocks. And they jumped to that conclusion based on the short-term movements in the price of gold stocks. Now, obviously, they haven't made new highs yet. I think they will, but clearly we've had a huge gain since October. And I think a lot of the people that saw that sharp decline jumped to the wrong conclusions. A lot of people sold their gold stocks in October, November, December of last year. Now look where they are. Look how expensive it would be to buy those stocks back. You need twice as much money. You need actually close to 3 times as much money to buy your gold stocks back if you sold them near the lows. And the fact that the gold index was only down 30% from its peak, that's a lot better than the S&P or the Dow. They were further from their highs. So obviously, even people that bought gold stocks at the absolute high, even though for a while they were doing a lot worse than the S&P, now they're doing better. But of course, anybody that bought gold stocks in 2000, right, gold stocks are tripled and quadrupled. The Dow is lower than it was in 2000. The NASDAQ is lower. The S&P is lower. So having bought gold stocks was a lot better than having bought just general stocks, despite the fact that we had that 70% decline. But that decline was a head fake. I'm still convinced that a lot of people got margin called out or got fooled or were forced to redeem, and people jumped to erroneous conclusions based on that sharp 70% decline that being in gold stocks was wrong. Or, hey, Peter Schiff said buy gold stocks to profit from the crash. The crash has happened and gold